good morning to everybody, first of all. So Union Investment, I guess you know a little bit about us. We are a German investment fund, a German company. We manage open-ended funds mostly for over now 50 years. And we also manage all type of asset classes, financial assets and real estate assets. And we have been operating now in 24 countries, 80% in Europe. And here in France, we have been invested now for 16 years, and with a quite large portfolio of 2.6 billion euros, specifically invested in offices, retail, and hotels. So yes, we are very familiar with the French market. We know the advantages and also the problems sometimes we have. And we have a very nice and established team here. And yes, I think we'll be speaking a little bit more about our activities and the discussion.
Great, thank you. Benjamin.
Hi, thank you, Richard, for welcoming us this morning. My name is Benjamin Cartier-Bresson. I'm in charge of the French office of Berlin Hub, which, by the way, is now a full branch and no longer a rep office. It opened 6 years ago now. Berlin Hub is owned by the German savings banks. That is important to know that we are giving services to our customers, but we are also at the service of our owners, the German savings banks. In terms of size, we have broadly 18 billion euro of mortgage loans, and we generate new volumes in the region of 5 billion a year. We offer mortgage facilities to SIICs, that is one part of our clientele, but also to private equity funds and to individuals with a loan range that goes from 20 to 100 plus million euros. And we are a true balance sheet lender, i.e. we keep our loans on our books, benefiting from the interesting rates at which we refinance ourselves on the fan brief market, being understood that we have a very strong expertise in fan brief emissions and fan brief eligibility.
Great. Alfred, where are you going? Now, Alfred has hurt his leg.
Therefore, I stand up. Sorry for that. No, I hurt my leg, and therefore, if I sit down too long time, it hurts really. Therefore, I just got up a little bit. Sorry for that. My name is Alfred Fink. I am partner with TaylorWessing here in Paris. TaylorWessing, international law firm with offices all over the place. We are very strong placed in Europe with offices in London, in Paris, in Hamburg, Munich, Frankfurt, Berlin, then in Vienna, and also in the CE countries in Warsaw and so forth, Prague. And we are very strong in Asia. The main thing which would I like to mention is that the real estate group is very close to each other. I have the pleasure to say that our head of real estate worldwide, Paul, is also with us today. He made the way over from London simply to join us to see what's going on here and to see also a little bit about the economics, what we have to share with our clients too. I think we are a group of about 120 people overall in the world and come together regularly to talk a little bit what's going on, what we can recommend to clients, and what are the news we can spread over the globe. North America, South America, we have only best friends. We are not directly linked with somebody over there. So it's something which is different from a number of our competitors. Paris office is run by 3 partners in real estate. We are doing mainly investment and financing, and particularly also asset management and everything with litigation and leases and so forth, as well as planning law. And we have, for each of these areas, a separate partner taking responsibility for each of these areas. I would say that's what I can say. I think we take all asset classes for the time being, and in so far, that's it.
Okay, great.
So actually, my name is Raphaël Tréguier. I'm the CEO of CeGeREAL. CeGeREAL is a green REIT. We're specialized in the holding of green office assets in the Greater Paris. Today we have roughly 1.2 billion assets on the balance sheet, and we aim at growing the company by investing in value-add/core plus assets.
So I'm representing here Grosvenor, which is a company investing in real estate on behalf of the trust of the Grosvenor family. I suppose we're best known for our investments for the estate in West London, Mayfair, Belgravia, but some more as well. But we're actually globally active, and we have companies investing in the Americas, in Asia. Here I'm representing Grosvenor Europe, where I'm Director of Research and Analysis. Now we invest across most asset classes. We've been investing in retail a lot. Recently we're looking into residential investments. But the overall philosophy is to concentrate on vibrant cities, and on we have a philosophy that we call living cities. So it's all about investing in cities, improving the cities with everything that comes with it, and that's like the underlying philosophy for what we do.
Okay, great. Alain.
So Affine, firstly, good morning to everybody, and Affine is already known from a couple of you, but it's a French REIT, as such is listed on the French Paris market. We are investing in France, mainly in the Paris area and in 6 major cities in France, the 6 largest ones, and we have also a subsidiary in Brussels. We are focusing on the office market and in an opportunistic approach on retail, downtown retail shopping centers. Our portfolio is approximately 550 million euros for Affine itself, and when you add the Belgian portfolio, we are close to 900 million euros of assets, and I think that's all. And we are investing approximately 100 million euros per year in brand new buildings, office buildings in the major cities.
Okay, good. Maybe starting with you, Jarek, just from the research side, picking up some of the things we've just had. The macro picture still looks very positive in a way for real estate. We've still got low bond yields, we've still got low interest rates. What's your sense of that? You know, let's look at the impact on France, but also on wider Europe. What's your sense of that? Do you think that's still a positive position in terms of real estate investment, more global capital flowing?
Yes, it certainly appears so. Well, as we just heard, economy is doing well. Actually, the confidence is pretty positive across most of the continent. So compared with the past couple of years, I think the markets look into some quite good times going forward. Certainly on the leasing side, on the occupier side. As you say, on the investment side, appetite is there. There's a lot of capital that just wants to be invested in real estate. What we'd call dry powder is plentiful, so investors are ready to invest. What is certainly a point that we need to be careful about is the level of yields. They are really low in historical terms, probably lowest in as far as we can remember, and that is something to be careful about. And we just seen what is happening on on the bond markets with interest rates rising and some central banks taking actions. So the question is, in how far will this eventually be reflected on commercial real estate markets? But that is something probably at least midterm, near term. There's a lot of appetite, there's a lot of optimism, so investors are actually quite actively there.
And Raphaël, in terms of your sense of how the market is viewing it, obviously there have been elections throughout. I mean, initially at the beginning of this year, a lot of the discussion we had was around political risk, what was going to happen. There was the Dutch elections, the French elections, the German elections, the UK elections. The Dutch ones sort of went the right way. The French elections, certainly from the feeling that they've been in the UK, the French elections have very much gone the right way. Do you think that's going to increase the sort of investability of France? Do you get a sense that the rest of the world is looking at that and thinking, okay, well maybe this is a different position now for France?
Well, I agree. As a matter of fact, over the last 3 years, most of the growth came from the cap compression, and we have been waiting for quite a while for rental growth. The key drivers are mainly the economy, and so what we saw in the main indicators from the PMI was investment, consumer spending, employment. This is very basic, but this, I hope, will come now. With this new president, there's a new wave of confidence. So I do hope that beyond all these confidence indicators we have now, there will be true investment, true employment, and true consumer spending in France. And it will have, by consequence, normally a very positive impact on the rental growth and hopefully on the long term.
Okay, good. And Tania, obviously, union investment, largely German money as well as other investment capital coming in. But do you think, in terms of the view from Germany as well, that Paris is now being seen slightly differently? That you think that there's going to be an upturn? What's in the investment committees? Are they saying to you now, great, more money for you to invest in France? What's happening?
It's quite funny how things can just move on and evolve. 2 years ago, nobody wanted to hear anything about France. It was French bashing all the way. And now, suddenly, maybe since 8 to 12 months, we start again to have an interest in the French market. We were lucky that there was the Trump election. We were lucky about Brexit. I think we took some profit and some benefit about this political uncertainty, and so France actually moved up, on the top 5 or top 3 of the markets again. But it's very, very volatile, because 2 years ago, for me, the fundamentals were good, and we had very low vacancy, and rents started to go up a little bit, and we have a large panel of tenants and users here in this market, and everything was fine, and yields were a little bit higher, so even the market was more interesting. But for political and economical reasons, France was not attractive enough. And now with Macron, a new president, and I don't know, it's like a new wave now that comes for France, but fundamentals, were good in the past. It's just sometimes also what are the alternatives? And the alternatives now are less than 1 or 2 years ago, and UK, everybody's really a little bit skeptical, same for the US. Germany is very, very difficult also, very difficult to invest in Germany because there are so many foreign capital coming. So France is actually taking profit of these very few alternatives, and it's a good time window for us. So.
Okay, so from your point of view, France very much is going to be one of the winners.
Yes.
Out of this whole discussion, so not so good for us from London.
For one time that we are in front of London, let's be happy with it.
That's interesting, Benjamin. I just wanted to come to you. So, I mean, what we're saying here is that yes, there's a change, but actually also that change in terms of the market was maybe already appearing 12 months ago, but international investors weren't picking that up. Have you seen more of a rise in terms of the people looking for loans from international capital?
As a German lender, I would say that France has been very active in the last months. But that was more because France was a sort of inevitable country. You had to be there because France is very interesting in terms of how deep the market is, in terms of asset size that you can buy, so amount of capital that you can invest. And that has also to do with how easy it is to underwrite an asset in France compared to other countries like Germany, which is a good market, but spread over several lenders. So what has changed now is that France has become sexy again, I would say. It's incredible to see the view that people have now. You can realize that they are optimistic. They think, the danger regarding presidential elections is now over, and everyone is. It's a big relief that again you can think of France as being a country with perspectives. Now, regarding what will happen, I think we are in the most interesting point in time, since the potential that France has can express itself or not. The new president has been elected. He's got a strong majority at the parliament, so things can happen. But now let's see if they actually happen, and if the reforms that we've been talking about for decades occur or not. If the sovereign debt, the French debt, that is probably too high, will be addressed through massive growth in the economy, or if, as it happened in the past, there is a sort of fatalité française, which makes that reforms are so difficult to be made, even when you know that they are strictly necessary. So we'll see, and we are allowed to be optimistic.
Okay, good. And Alain, you've obviously got a comparative as well with investing in the Brussels market. How do you see those two markets at the moment? Do you think France will now power ahead versus Brussels, or do you think Brussels might gain something from Brexit? Where do you think the game will be? Will people be moving offices to Brussels or to Paris, or how do you see that?
I would not compare the Paris market to the Brussels market. And the size and nature are quite different. So Paris is the only European market with London, because the German market is spread in 4 countries. So obviously the prospects are much better in Paris than they are in Brussels, even if things are improving in Brussels. But Brussels is a minor portion of our activity. So I would like to come back to the French market. I heard Tania say that there was some French bashing 2 or 3 years ago. This is obviously true, but it didn't reflect in the amount of funds which were invested in France. You've seen the BNP slides that we stay at over 30 billion per year. I think the French market is not a B plan because England is in Brexit and Germany is difficult to work in. I mean, I would say that France is one of the 3 markets which are inevitable for any large-scale investor in the world, and those of us who are struggling to invest, not only in Paris but in other large cities, can see how many people are now on the market, and every deal is a very competitive situation, and rates, yields are going low, even I would say sometimes a little bit too low. We may reach some bubble situations in some places. The best deals in Paris are far below 3%. And so I don't see any alternative for investors in the short run than going on increasing the size of their exposure to properties compared to other investment vehicles. And so I'm very, very optimistic on the French market.
Okay, good. Yeah, of course, yeah.
I think, if you allow me only a short comment hearing that, I think I fully agree with Alain about the investment volume which was handled in France or in Paris over the last couple of years. They were pretty stable, I would say, even if we had a decline. But what was the big difference is, and there I think Tania was right, there were very often 60% foreign investment in the French market, and that has now been completely changed. The French market has been taken over by the French investors, more or less, so I think the entire size has been quite stable of invested capital, but simply the investors changed places. There were 60-40 and then more 40-60. So I think that is where Tania was referring to my understanding, that there were the foreigners who were less active in the market. Yeah, the Germans particularly. And then I think what is perhaps a comment which is more very general is people are more optimistic, and I think it's simply psychological. Economy is very often not only down to earth by figures and pure analysis and about what's going on. And when Tania said the figures were already right 12 months ago, but nobody was picking up on that, I think it's simply that human nature is now talking, saying having a young, new president in France who is saying the right things to the people and has a very international outlook, speaking over a comment which Mr. Trump made, first to the French population, and half an hour later he addresses the same speech in English to the Americans. That has never been before the case. At least I don't remember. I've seen that over 20 years living now in Paris. So I think it's really the mind change which the president may give to the entire economy to be more optimistic. It's, for me, it really is a psychological effect.
Raphaël, you want to take that?
One of the key questions I have, and frankly I don't have the answer, is Greater Paris is 50% bigger than Greater London, while the investment volume is just twice below. So is the 30 billion euros as a cap? Are we capped with these 30 million euros, and for which reason? Because frankly, our office stock is so wider and deeper than the London one or all the German one altogether. But as a matter of fact, we have at 30 million for the last 3 years. So it's a real and open question, and I think it's maybe our market is just more stable, and some part of the investors are buying changes, negative or positive changes, but at some point in time they need some changes in the business plan to create some value. Maybe they're buying volatility. For that, we are not familiar in France with such a concept. And but at some point in time, I'm not very sure that if we have a lot of capital inflows in France, it will dramatically change investment volume if we do not provide these investors with some reason to invest. So one of the key drivers I see over the last 5 years is the Greater Paris, because it should change dramatically the profile of office stock. We have been building office hubs since the 90s. These hubs are today linked with all transportation directly connected to the center of Paris. This fantastic high-speed train ring over Paris will connect all these office hubs. And so this provides a lot of opportunities for many types of investors. And I do hope with some rental growth that we can dramatically increase the 30 billion euros cap that we are knowing now for quite a while.
Maybe just one comment. It's also a problem of sourcing. I mean, even if we would like, to do more on this market, I mean, there's no product. So we are a little bit stuck. And all these foreign investors coming up more and more also take away product from the French ones. So it's the dynamic is there, and the motivation is there. But if the product sourcing is complicated, then we are stuck on a certain level.
I think it's a little bit too early to assess exactly what the impact will be on the economy, on the rents and the tenants' behavior. I mean, people are still expecting to see what will be the policy. We are even expecting who will be the ministers, because the names are changing every day. So we need to get a more stabilized view of what the government will be. And this will be done throughout summer through the ordonnance mechanism, which will bring some reforms on the very important aspects of the French French situation. So we won't be able to assess the impact on the economy before September or October. But whatever will be the decisions of Macron, we already know, and I guess a friend from BNPP will agree, that the prospects for the French economy in 2018 are quite good. We are something between 1.8 to 2% growth for GDP, and we have a shortage that we have seen of office spaces in some areas, and we see a lot of companies trying to get new premises. The new economy is doing has a lot of impact on the demand for office spaces, and the old economy is also asking for new premises, even if the activities are not quite new. So overall, we have a strong demand, and more or less this will lead to an increase in the rent, which has stabilized, but it won't be a direct consequence of the economic policy of Macron before months.
Okay, good.
Yeah, maybe one comment on the labor law. I think labor law is very important for corporates. They constantly make arbitrages between countries, and right now it's difficult to say if it will be easier to hire people and sometimes get rid of them when the business is not so good, or if things will remain as they are now. So that will be a serious test, and I bet that if the labor law is seriously reformed, amended, then corporates will indeed change the way they plan to have new office spaces rented in France, being understood that the level of incentives that we have today is probably still a sign that, well, in terms of negotiation power, the hand is more on the tenants' side. So that still needs to change.
Raphaël, did you want to pick that up?
Yes, on our side we see the tenant incentive decreasing. Decreasing, yes.
Good.
The process started 6 to 12 months ago, depending on the submarkets. But the headline lines are roughly the same, with the exception of Paris. We did start raising 12 months ago. And so we can't say rental growth will be immediate, but at least economic rents are rising now. So it's better.
Okay. And are you seeing that as well, Alain, in your portfolio? And also outside of, I notice you're not investing in the 7th largest French city, which is of course London. But you are in the top 6 here. What's your...
Just maybe one thing I'd like to say, because Benjamin highlighted the labor law. I heard a lot about the labor law in the framework of the Brexit discussions. We may highlight that the German labor law is much more complicated than the French one, and we should say it again and again in the press, because it's been more than 12 months now that I speak about France versus London in the framework of the Brexit, and frankly, most of the people just don't know that the German law is much stronger and complicated than the French one. So please just tell it, and it will help France. Thank you. I'm sorry for my friends on my right.
You may allow me, as a German lawyer, to tell you something about that. No, I think the point is not about complication. It's simply about the way the unions are acting. I think in Germany you have a more kind of a consensus between employers and employees over the unions. And it's not so, let's just say it's something opposed to each other. Look what they did with Mr. Schröder in 2000 and something, 2010. He has his agenda 2010. And then all of a sudden, the entire employees in Germany accepted to get more or less a haircut of 30% of their salary, owing that everybody stay employed. This kind of measures are something which is doable in Germany if the unions and the employers do things together. And this kind of cohesion is something which most people are a little bit looking for. The rest is surely right, but I think that is something that the unions have less power or not playing a power game publicly with the employers. And that is something people don't like in France, that we have a strike, people in the street. That's something we have less in Germany than you have in France.
Frankly, let's be frank, but a long-term discussion and consensus and so on, it's fantastic in industry, in the manufacturing sector. But here we're talking about the Brexit, and what it does take are people, big corporates looking for flexibility and quick decisions, and so I'm not sure that this frame is the best one.
Sorry for that. And I think the turnaround is actually something you have to do for France, not for a few startups who are hiring perhaps 10,000 or 20,000 people. And I think that is a point we have here in France, something to do which is more profound. And I think that's something people have to look in. And I think the short-term hiring and firing, nobody likes. Even the lawyers don't like it, but there should be a framework which is acceptable to everybody to execute. And I think that's where we are looking for.
I wanted to pick up a little bit on just Alain with you in terms of the other cities and Paris. Also, are you experiencing the same as Raphaël, where incentives are beginning to decrease, so that's beginning to help in terms of rental?
Yes, all the CBDs are doing quite well in those cities for various reasons. First of all, there is I think a long-term trend for people moving south. Industries now are taking in consideration all the comfort of life in the southern parts of France, with all the cities close to the sea, like Nantes, Bordeaux, Toulouse, which is not close to the sea, but in the south of France. And so we see a lot of new technologies, company moving south. And I think in the long term, there will be decrease of the demand for crowded Ile-de-France, crowded and noisy and polluted Ile-de-France towards those areas. Second, there is, of course, an interest from the investors, which are now unable to find on the Paris market yields high enough for the funds. And so they move, as we did a couple of years ago, to those cities where you can still find very good buildings with stable tenants at 5.5, 6, 6.5 yield in the CBDs, with now, for the largest cities, liquidity of the assets which is increasing. So I think with the prospects for those cities, and when I speak of south, I would add Lille, which is not, as everybody knows, in the south of France, but which is a kind of center of Europe, linked with London, Brussels, and Paris, and doing very, very well as far as the property sector is concerned. So we think the future of those cities is very, very promising.
Okay, good. Tania, I wanted to check. I mean, obviously, in terms of union plainly involved in across sectors, hotels and retail, but your area particularly is the office sector. Does that mean, because it's difficult to find product at the right pricing also, does that mean that you're kind of moving slightly higher up the risk curve in order to be able to invest and put the capital to work? Or does it just mean it's more difficult to find the deals that you want and it's therefore more difficult to put that money into the market?
Definitely, it's very difficult to find the deals that we are looking for. So the strategy is again the diversification, and that's what we do. Diversification on the geographical area, on the volumes, on the asset classes. So of course, that's what we have to do. We have to also be a little bit more risk players, since even if it's not our DNA. I mean, open-ended funds, we manage the money for private people, so we cannot take actually risks. But we need to go now to a little bit more core plus and value add operations, which means that we start to do a lot of development. In the past 2 years, 50% of our acquisitions, so about 2 billion, have been invested in the group in development projects and speculative projects, sometimes without rental guarantees. But we have no choice. I mean, we need to look for some yield. We need to look for big volumes. We also want to manage all the value chain. So development projects is an opportunity. But of course, I would say the risk level is a little bit higher than a couple of years ago, and we also will be analyzing maybe new asset classes, and like we're doing now with residential, maybe student homes, senior housing. So these are all discussions that we are having, and it's totally new because until now, we always were office, retail, hotel. We managed this perfectly well. Why change, no? And now of course, we are obliged to open our minds and maybe open also our activities.
Okay, good. I just wanted to come to Jarek, because obviously Grosvenor, well known in the UK for a number of different things, but also residential. And active more in residential now, both in Paris, I think, but also in Madrid. What's the attraction? Correct me if I'm wrong on any of that.
Yeah, no, absolutely.
But what's the attraction for you? Is that the same kind of hunt for yield, that there are more opportunities you see in that particular market?
Well, I think the background is a bit different. So we're a long-term investor. We're looking back at something like over 300 years of history, and looking forward 300 years, you could say. But so it's of course we're still active on the market, and we still generate returns, and we're here to make money like everyone else. But our perspective is and the reasons for residential are maybe a bit less cyclical. It's a bit less hunting yields, but looking for other areas to generate long-term perspectives. And one reason is, well, there's two stories. One story is that residential is a sector that is driven by completely different rules. It's a different cycle than commercial. It's much less this sort of sentiment, economic performance thing, but it's a lot of this is demography, and what we see last couple, no, more than just couple of years, quite a while now, is a trend to urbanization. People move to cities. It's young people looking for this vibrancy they find in cities, but it's also elderly people who just move back to the cities, to inner cities, once children left their homes. So there's it's an entirely different reasons why the markets move as they move, and that gives us quite a nice, you could say, diversification effect. So that is something where we can look for different options to the commercial sector, and we're trying to combine them as well. So in Paris specifically, we're looking mostly at the northeastern part, which is very vibrant and very lively, but not really quite as core office or as CBD, and looking specifically for maybe office buildings that could be converted. They are leased now. They could be converted in residential. So we could create this space over time. This gives us options and being basically on both sides of the game. And this, what we're also trying to do is to, try to benefit from this urbanization trends in long term. So that is something where we see just fundamental growth is coming, not just cyclical. And the other reason is also that we can, that's the area where we can live our living city strategy much easier. So just trying to create, well, it will be difficult to create something like in Mayfair, like a proper estate where we manage the area more or less. But going that direction, trying to influence the neighborhood, influence the area, and improve the area as such, and get a boost long term in values, not just playing the cycle, but just changing the game, basically changing the nature of the areas. So it's a bit more this kind of thoughts that are behind us moving now to residential in Paris, with these trying to look into these options, conversion or not, creating even retail. So you can create neighborhoods by creating retail on the ground floor, apartments above it, and just improve the area, increase the vibrancy. But then also to benefit, well, in Madrid, it's the recovery story as well. So the market is recovering very quickly, and partially driven by foreign investors, even South American investors that come in and look for product that's just not there. So the market's recovering on one side. On the other side, there's lack of product that investors are looking for. That's again something we can benefit from. So again, we are looking for yield, as everyone, for return, maybe not so much for yield. But the reasons behind going into niche sector, well, I wouldn't call residential a niche sector anymore, but going into these sectors is not because we have been crowded out of the other investments. We're still investing in retail. We still invest in other sectors. That's not the case.
Okay, good. I think it's very interesting to see a 300-year investment time horizon. That's quite good. Interesting, Raphaël, and actually Alain, to degree. Are you seeing more competition for what would traditionally have been an obvious office from areas like residential, hotels, maybe even, there was a lot of discussion, certainly in the logistics events that we've been doing, plus also the one in London, about more of a change from urban areas that might traditionally be office, that now that same office is competing maybe for a mix of retail and residential, or hotel residential, or even logistics and residential as you begin to get more urban logistics coming in. Does that mean that sort of office is now competing much more with the other sectors than maybe it was? What's your sense of that?
There are many questions in yours, huh?
I thought you were just going to say no.
I would say, first of all, maybe about Paris, and then about the first ring. Both have architecture history totally different. Paris is a very built city, so it will be highly complicated to turn all the existing office asset in more mixed asset with shopping centers and so on. I would say to add to the existing office stock, which is already slightly mixed, some other office asset with maybe some residential and some shopping centers on the street level. On the first ring is totally different, and a lot of new office assets are sought now with sometimes some hotels, sometimes some shopping, sometimes with leisure areas, and it's really the trend. And there's some space and a lot of projects taking into account this new demand. Part of the question was also about the office, and is it complicated to invest in office asset? Yes, the answer is yes. It's highly complicated to invest today in office assets. And there are a lot of pressure, a lot of people buying at price much higher than even the brokers can sort when they try to pick up the mandates versus their competitors. So it means that we are now entering potentially the red zone, and we should be very careful. Does it mean that there is no opportunity anymore? Frankly, I don't think so. We're currently in discussion on many opportunities in the first ring and in Paris with good yields, but it means that people are ready to focus on what they can do, their expertise, and they could find some good things.
I think you're right. We're moving towards a complete change of the way cities are organized, and the demand for mixity between offices, retail, residential, and other types of buildings is growing. So we have more and more opportunities to mix together various expertise, and this applies, of course, to Paris with the restrictions which were mentioned by Raphaël due to the history. But it's true in Paris. It's even truer in the first rim and in the regional cities. And so we will have traditional offices, co-working offices, traditional residential, student housing, senior housing, together in the same areas. And the mayors of the cities are eager to avoid any partitioning of their cities between two specialized areas, as this has been done for decades, for years. And now they are looking for this mixity, and we, as property companies, we are doing a lot to try to help those mayors to organize in this way their cities. And we will see also moves from one use to another one for buildings. For example, we are studying now organizing 3 former office buildings in senior housing, and this will increase in the future. There will be some switch between one use to another with the time, and so the flexibility will be much greater in the future than it was in the past. There are connections between the various markets that did not exist until now.
So you're already doing transformation projects?
Oh yes.
You're moving from office
to senior housing, yeah, or to hotels, or to, yes, definitely, yeah.
Okay, good. Tania, one of the things that came up in London, interestingly as well, was the changeover that was expected in terms of the type of tenant. So that less maybe of the larger long-term tenants, and actually more in terms of the WeWorks, the people taking larger amounts of space, but for shorter-term leases. Do you expect that to happen here in Paris? What's your sense of the way the office sector might develop from the occupier side?
Definitely, there is a strong move now with the WeWork style office type, which, if I remember well, represented about 10% of take-up last year, and take-up was about 2.5 million square meters. So the tendency is there, it's strong, and I think all investors are looking now at this new type of office, which is definitely something that the users want, and it's a new trend that is coming, and we will not be able to avoid it. But for investor, of course, we prefer to have long, stable leases, and I always hear my German shareholders who complain about the 369 leases here in France, and compared to London sometimes, where you have 20-year leases. or more. So this trend with the co-working office model is not very clear yet for anyone, because we don't have any history, and we know that the users are asking for it, and we will have to develop, I think, an offer and be more flexible, look more about the well-being of our users, and flex office services, all these new demands that are coming on the market. So we're working on that, but on the other time, it's difficult to switch from a classical lease configuration to a very flexible, open configuration where your tenant can just leave the building every month. I mean, it's a new trend. It's definitely there, and we have to work towards, I would say, more flexible way of thinking and doing business. But as an investor, we also have a lot of capex every year. We have huge investments, and it's not so easy to have the users on the other side who can leave your building whenever they wish. So it's a challenge. It will definitely be a challenge, but all kind of users are asking now for this, even traditional sectors, not only in net economies. So it will be an interesting question.
Did you want to pick that up?
Yeah, I think we heard a lot of noise about WeWork, Revolution at Work, and all these kind of things. WeWork is really providing solutions to small companies, and WeWork are not our competitors, they are our customers. Typically, if I go and see WeWork, is not to buy an asset from them, is to sign a lease with them. And so it means that rather than having a large corporate having 5,000 square meters in one of my office, I will sign a lease with WeWork, and WeWork will take care of all these small companies. Is it frankly a new solution provided to all the tenants altogether? Frankly, no. We have been providing to all the big corporates all the services provided by WeWork for quite a while. Auditorium, lounge, sports room, community areas. We have all these in all our big offices for quite a while now. But the new thing from WeWork is first the fact that they open all these very pleasant areas, which definitely help the corporate to create some values, because it put all the people together in a different situation as a normal meeting room. But so people need to talk, to exchange ideas. The big corporates have these opportunities for quite a while, but not the small companies also have. The other big changes from WeWork is the flexibility, and this is really for me what could change our industry, because the big corporates saw here some type of solution they never had access to in the past. And so we need to maybe to rethink our own model as long-term investors of how much percentage we're going to allocate in our portfolio to flexible space. And I'm talking about the model, but I should talk at the building level, but also at the lease level. Like now, so it's going very deep in the organization. So now when we talk to a big corporate taking 10,000 square meters, it's not surprising to talk about having maybe another 2,000 square meters somewhere in the building, not fully guaranteed to them, but something where there's some kind of buffer if they need some flexibility, and that's something very new. The third thing about flexibility is the length of the lease. In France, we have a law with the 369, the classical lease. We don't have, there's not a real legal framework appropriate to propose to the tenants now to provide them with the flexibility they need, to allow them to put 15 people in 100 square meters like WeWork is trying to do. There are a lot of things where we need to improve to change the French law And I'm talking about the French law, but frankly, this issue I'm talking about are exactly the same in other countries. Huh? So I love WeWork. It's an opportunity for us to check a little bit the box and to bring some new ideas. But the real revolution for me is more about how we're going to keep on attracting the big corporates by having a long-term visibility while providing maybe 10, 20, or maybe 30% of flexibility in the lease or in the building and so on.
Everyone welcomes new infrastructure. That is something that adds to the business, and that adds even more so to the livability of the city. So it's not just about moving people between offices or from airport to the office and back. It's more about making a big town smaller, if you could say so. And this was well, it's hard to say what was first and what was second, but I do see this in connection with the urbanization trends. There's just more and more people coming to cities and wanting to come to cities, and there's clearly demand for these kind of measures. You see them in Paris, you see them in London, you see them basically everywhere. There's just huge public demand, and there's that's definitely an improvement. So I do think that there will be a boost to the city, to any city, at Paris, with a lot of projects going on. Certainly will be one of them.
If you compare Paris to other large cities in the world, or at least in Europe, there is no weakness of Paris regarding infrastructure. I mean, and among the facts which are listed by investors coming to France, usually good infrastructure is among the advantages seen in Paris. And when you travel to London, for example, you may see that Paris is not at a loss regarding that. And of course, the Olympics game would bring a lot of fuss in the first stage, and in the second stage would give the impetus to improve what is already existing, and to probably to build things which have been delayed for too long, too many years, like the link between Paris and the airport, which is a nightmare for all of us. It will, from this point of view, it will lead to major improvements in connection to what has already been scheduled in the Greater Paris operation, which it will take 10 or 15 years to implement it, but nevertheless, in the long run, it will definitely change the infrastructure and the transportation network in Paris.
You know, it's a nightmare for us, but it's even more nightmare in London, because with the exception of the CityJet, all the other airports are quite far. And if you want to go from an airport to another, it's half a day at the worst time. So, and second thing, Paris has the highest transportation network in the world. We are the only city in the world with 95% of the population as less than 1 kilometer from the metro station. Sorry for London, but you're very far.
And it's true that it has deteriorated over the last years, as you say, but that also has to do with how productive the system is, i.e. the number of people traveling every day has constantly increased. So that has some consequences on the service, which is not as good, but compared to the others, it remains outstanding, really.
If you have a short-term view, definitely. Yeah? And please call me, yeah? I'm a buyer.
It's a cycle.
No, but
there are a lot of assets in the market.
well, and unless real estate story change, it's always about the cycle, and the cap rates are historically low. So if you're a short-term player, please call me. Yeah? I'm here. I don't have a business card, but.
I definitely understand your point, because I see in the last months a lot of portfolios coming on the market, and there's a rush now, something maybe expecting a turnover of the market, and everybody wants to take their ticket now. So I never have seen so many dossiers, investment, so we have to be careful and be selective, but I think everybody wants to try to get rid of some some issues before the yields raise again. So I understand your point, because we have also these discussions internally. And I think this year will be a big investment year, attending, expecting, waiting for rising interest rates and rising yields maybe in 2018. So.
And does that suggest that then there's room for more development than is currently in the pipeline? Does that mean that, you know, if we're expecting a big pickup in the economy, which is quite interesting, the GDP jump that we're expecting in a relatively short space of time from Richard, does that mean that now is the time to be developing or redeveloping?
Well, in a way we did, but again, this is whether you develop fundamentally or buy. It's you're probably taking different risks, so it's a bit of a different investment style. If you just core income, focus on core income producing assets, there's a different risk profile to it than developing. What I think is still opportunity, despite this. Low yields pretty much everywhere. We're not just talking about Paris. I mean, even if you look at markets that were, Spain, Madrid, that were very far outside of the radar of many investors, the residential yields are below 4%, 3.5%, I think, last time I saw. And sorry, this is retail, prime retail yields. So this is a very broad picture, but there's still niches. There's still areas where there's demand, but there's no product, and that is where you can probably do a lot, just using developments. I mean, I'm coming back to our own investments, as probably everyone. Does. That's what we focus on. But what we're looking at in Madrid is just filling in this gap for high-end residential that's just not there. This market just was non-existent a couple of years ago, and there's huge demand from international investments. I mean, I think if I remember the numbers right, 2007 there were just 10% of foreigners buying in this upmarket sector, and right now it's something like 60%. And this international buyers come with some expectations of international standards. What they find is the local standard, and that's not necessarily appealing to some of them. That is where you can provide the market with something that's just not there, and there's developing or redeveloping refurbishing is the way to do it.
Good. We're getting short on time, actually. One thing, just 30 seconds from you, Benjamin, because it would be wrong to have you here and not ask this question. What's the position with financing at the moment? What's available, what's not?
Well, the capital markets are running pretty well at the moment. The appetite for covered bonds backed by mortgages is high, clearly. So we've been able to place fund briefs at record low yields. On long-term periods, like 7-10 years or more. The perspectives, well, if you take the big picture of where mortgage lenders are, clearly we have a midterm, not challenge, but we need to make sure that we pass the next cycle the best possible way. Our business is very cyclical. And should prices fall down slightly, then we will have to make sure that we survive this. The fact that leverage has stayed under control over the last years is a very strong element of security. I think that it protects lenders very well from future problems. Having said that, we know if a loan was a good one or not when it has to be repaid. At that moment, we need to make sure that the level of interest rates are compatible with refinancing. If the assets are not sold, then our loans need to be refinanced. So we'll see in 5 years, 7 years, 10 years from now, if the loans that we originate today are good ones or not. Which is why we take measures like introducing debt yield covenants in our loan agreements to ensure that even if rates pick up, there is still enough room for refinancing them at reasonable interest rates and with some capacity to amortize down the loans.
Okay, good. We'll come back in 5 years' time, Benjamin, and check to
Yeah.
see whether they were. One quick one for you, because I haven't asked this, and it's one thing that I wanted to check was, you've obviously made a big part of CeGeREAL in terms of sustainability, and that also picks up quite a lot of things that also actually Jarek was talking about, and we did a session on human capital, cities, how that's influencing investment decisions. Is that part of that overall move? Is that part of the sustainability of the investment, just in terms of the strategy behind that?
Well, usually the big corporates never decide to move for a green reason, but they never enter a building which is not green. So it means that if you want to have a good investment over time, you need to be sure that either it's respectful today or can be with a restructuring project. But there is no, it's part of the future, so that's the reason we decide to move and to the green world.
People say we have a kind of a social responsibility as tenant towards our employees, and therefore they would like to have at least a building which looks green, smells green, has a label and so forth. So they pick it up as one of the arguments also towards the employees. And I think second, if you do it right, and I think that is what Raphaël is referring to, you have also built in a cushion by which you can transform the building to something different much easier, most probably. And that's simply about that, at least that's my understanding.
It's much more about corporate social responsibility overall than just environmental matters. And so between 2011 and 2014, we launched what we call the Go Green project. And so the idea was to have the whole portfolio totally certified. And so in 2014, we became the first REIT in Europe fully certified. Then we launched a second phase, which called Upgrade Your Business, which is a message to our partners, starting with our customers, so the tenants, saying, guys, now you're working with a company fully certified. Let's see what we can do together. It will be good for your brand. It will be good for us. It will be good in terms of social responsibility. And so we laid on all the whole organization at the table and rethink it. And now we are also at the European level, the first office REIT beyond all the big ships and at the GRESB benchmark. So yes, it's still part of the identity, but more than that, for me, it's a trend that everyone should follow.
Okay, good. And just so that there's a little bit of time left for networking afterwards, a quick investment question. I'll start with you so that you can then. So 2 questions here for everybody, very quick ones, which are: where would you invest? You can stay to France, or you can be more European, depending on your view. And also, for the Deal of the Year awards next year, is there something already in the first half of the year that you think this could be pan-European or France, but which you think should be looked at for the Deal of the Year? Starting with you and going that way and ending with Alain.
No, I think I would certainly invest into France. I think, having heard about residential, I think what is interesting, looking at urbanization, I think people are looking for smaller apartments, most probably. And I think if you look about the plan also for now our new president, Mr. Macron, he was telling about flexible leases he would like to implement, so that people get also a little bit more flexible, not only living in Paris, but perhaps moving over the weekend to Lyon or Marseille or somewhere else, and then getting back to the family over the weekend, and therefore spend a proper sort on leases, flex leases or flexible leases, as he said it. I think that's something that would be part of my thought, to have smaller apartments with larger social areas where people nearly close to student housing, I would say, but student housing and simple for people who are moving forward and backward between cities for their job, that they can find a decent place and have also communication with people who are in the same situation. So I think that would be something I would look into personally, to invest into France, because I don't think that it exists already in a large way. And I think elderly homes certainly also something. Everybody becomes older. I see that by myself. You see my leg is hurting me. And so far, I think that would be something I would look into, and most probably to go to the south of Europe, somewhere, Portugal or France, to get something also. I think that's really important. Interesting what we heard about Grosvenor, about luxurious apartments which are missing. I think if you look at the Fortune's 500 and see the productions of numbers of billionaires and millionaires in the world, I think that is most probably a growing market. And so far, I think that would not, that would really go above, beyond my budget. But I think that would be also interesting.
Okay, very good. Benjamin.
If I had to play with my own money, I would certainly manage to get very cheap prices on assets to be bought in London these days, since uncertainty is probably at its peak. Betting that things will recover in the coming years, so I'll try and do that. I would avoid investing too much in retail unless iconic shopping centers, of course, but otherwise, feeling a bit nervous about that. And the deal of the year, well, I've just seen this morning that Gecina could possibly take over Euro 6, so if that happens, that could be really the creation of a new major French SIC. That would be pretty interesting, if that happens.
For the first question, so the group will definitely be investing in France, Germany, and Northern Europe. That's clear. As personally, I would take advantage of Grand Paris. I think there's a lot of good deals to do in offices or residential, because this new transport infrastructure will be built. So everywhere, even if it's in 10, 15 years, but we have a long-term view, I think there's a great opportunities to take in the Grand Paris. And the deal of the year, maybe Coeur de France. There is some tweets going on scopes going on Coeur de France, which was in 2007 the biggest European transaction of 2 billion, when with the Lehman Brothers who went bankrupt just after. So we hope that the new investor will do a better deal, but it will be a huge transaction, I guess, if it's done.
Okay, good. Raphaël.
Well, I will personally invest in a bright future secured by the Grand Paris through CeGeREAL, and I agree, Coeur de France or Gecina, one of the two for sure.
So I think in terms of target markets, it's more about cities than countries. So I don't think it makes much sense to discuss France against Germany against Spain. It's much more against the Paris, Berlin, London, Madrid story, and we invest in a lot of these cities. So we do believe strongly in Paris. We believe in London, despite what you hear. We believe in Madrid. We believe in Stockholm. We believe in just big, vibrant cities. That's the main story, and that's where we would go. And within these cities, again, what people are looking is, I think, a place where they can live and work and enjoy themselves. So it's a mix of these things. There's a big residential component, certainly. There's a bit of mixed-use component with just creating this life in the city. So retail ground floor and residential upper floors are, I think, quite interesting. And then I'd like to echo Alfred on what people are looking in terms of residential is different to what they get. It's right now, inner city apartments are just tailored to what we used to have 20, 30, 50 years ago. Right now, it's young people moving to the cities looking for small places in very central locations. In this sense, I'm not so sure if they would move very far out of Paris because there's a train connection. They look for smaller places right in the center where they can walk, not take a train or cycle at best. And then there's a question of elderly people that are an increasing group. And I think aging is another term that we discuss a lot internally. We do a lot of research on this, and that is something that will imprint real estate enormously over the next couple of years. We are aging, and cities are aging, and that means this group that requires maybe a bit bigger apartments. They're not so constrained financially, but with good facilities, with access to what elderly people need, doctors, shops, etc. And that is again something we don't see. So that's something you can just create. That's the opportunity.
Okay, great. Alain, where to invest?
I think we will stick to our choice of center city investments in the offices, flex offices, and quasi-residential buildings for senior students, etc. And feeling the same way that people are going to concentrate in the downtown areas and refrain from going in the suburbs. I would also agree with Benjamin that there may be some upside in London once the fate of Mother Teresa has been settled. And as for the deal of the year, Affine has no project yet.